Jack, there's a belief that ethical funds have a feel-good factor that may come at a cost of investment returns. Can you explain your ethical screens and if you think there is actually sacrifice of investment performance for having an ethical philosophy?
Our ethical screen excludes things involved in greenhouse gases, gambling, tobacco, and things like deforestation and so on. We don't think it will have a negative impact on our returns. We actually did do a back test for our Morphic Global Opportunities Fund, assuming we'd applied the screen, and found that we'd actually have added about 0.3% per year to our performance had we applied the screen since inception. That's a short time period, it's only 4.5 years. What I can say is that in my more than a decade of investing at Hunter Hall, I managed to consistently produce alpha against the benchmark at that time and some pretty good absolute returns, and that was in the context of an ethical screen which I applied very rigorously. So I think, to be honest, in the end, stock picking and good risk management and good portfolio construction will trump any negatives associated with ethical investing.
So that brings me to risk, and managing risk is obviously just as important as investment returns. How does your team think about risk, and what ways can you manage the risk process?
One of the reasons that my partner Chad Slater and I left Hunter Hall because we wanted to manage money in a much more tightly risk-managed framework. So the way we think about risk is making sure that we reduce the volatility for investors. We think it's important that investors have a good experience whether they come in on day 1 or day 50 or day 100. What we do in practice is we say, what is the most amount we're willing to lose on this investment if we prove to be wrong? We're going to be wrong from time to time, so it's important to have that framework. So we're very focused on a limited number of opportunities. We're very vigilant about what might constitute an error in our analytical process, and then we're very agile in reacting to that change by basically getting out.
So the size of funds under management can sometimes affect portfolio returns if the fund grows too large. How large do you think your strategy could grow to before investors might start being affected?
We know we can never get to be as big as, say, Platinum or Magellan because of our risk management process. That requires us to be able to leave stocks as well as enter them. So, it's not a problem for today, and it won't be a problem for investors in the Ethical Equities Fund, but we know we can't manage more than about $3 billion in total, which is a lot smaller than most of our competitors. And that's because we want to make sure we have this consistent risk-managed framework.
As investors, we love to invest alongside management. They have skin in the game. How will you align the interests of your portfolio management team to the actual investors in the fund?
That's a very good question. I am, I think, the largest personal investor in the Morphic Global Opportunities Fund. I'll also be investing $500,000 in the Morphic Ethical Equities Fund. So I'll have very close alignment, I believe. And it's not just me. Westpac Bank, which owns 1/3 of our business, is going to invest $5 million in the fund. And Jeff Wilson, who has really been the pioneer of well-managed listed investment companies in Australia, is going to help us with distribution and will be investing $1.1 million of his own money. The whole board of listed investment company will also be investing. I think we'll have good alignment, and it's not just short-term alignment. When we get bonuses, very unusually, 1/3 of all bonuses earned by the investment team have to be invested in either the Global Opportunities Fund or we'll have to buy shares on market in the Ethical Equities Fund. So we really want to make sure we have alignment. It's not just short-term, but also as long-term, because I know from experience that after an investment team's had a good year, quite often have a bad year afterwards, hit their eye off the ball. Our aim is to make sure we have really good longitudinal alignment so that people who get a bonus know that they've got to make that bonus continue to perform through the performance of the fund.
Retaining talent is really important within an investment team. How do you plan to retain your staff and make sure that they're well aligned with you and the future of Morphic Asset Management?
Well, the first thing is that particularly Chad and myself are large equity owners in the business, as is our risk manager, Jeff Wood, and all the team have an equity stake, albeit in some cases not as big as ours. That's a very important thing. I think the more important thing is to have a culture where people really enjoy going to work every day, to be honest. I think that somebody once said that the key to a good investment manager is to take your job really seriously, but yourself not as much. Because you have to be able to have that resilience, that willingness to accept you made a mistake, that willingness to pick yourself up off the floor when you have made a mistake, and to keep going, because it's a tough job. it can be very emotionally wearing because, I don't know how everybody else does it, but certainly I always feel very conscious if the fund is losing money, that's not just some abstract entity, that's individuals who've entrusted you with their money to manage. They have a very, very close, personal involvement with the fate of your fund. And so that's, if you like, the most emotionally draining part of the business.
Most investors understand the advantages of the closed-end fund, the listed investment company, but sometimes they can get frustrated when their share price performance doesn't match the underlying portfolio performance. What will you and the Morphic team be doing to make sure, as much as you can, that the share price will correctly reflect the net tangible asset backing of the portfolio?
We're having roadshows in every capital city, including Canberra and Hobart, for investors to come and ask us about what we do, why we do it, and what it means to them. So I think close personal engagement, that's the best cure to the discount problem. It may not solve it immediately, but I think as time goes by, you've got to build that trust so that if people see an opportunity in a discount, they'll actually buy it.
Ethical investing, is there a personal story you can share or something you could tell the investors why you were choosing to go down this route?
I started my career as an ethical investor. Hunter Hall converted to becoming an ethical investor in about 1997, about 3 years after it launched, which is just when I joined the company. I think it's a fantastic thing. I think it makes you think about risks in a different way. It builds a tremendous sense of spirit within the organisation that's doing it. And as a father of 2 teenage children, I'm very conscious of the fact that the world we leave behind has to be no worse than the world we were born into. It's going to be a tough ask given what's happened in the last 30 years, but I'm very conscious of greenhouse gas issues in particular, and also things like deforestation. So part of the process we'll have in this fund is to focus very closely on things like species, not investing in companies that damage diversity of species and so on. And we're going to be giving 2.5% of our management fees from the fund to charity. We've selected a charity called Bush Heritage. So it's something that I think is a fantastic alignment with the way we see the world, and we're very happy that we're going to be helping to build what we hope will be a rising income stream for that charity.